Welcome everyone to another webinar brought to you by optionslam.com. Please read and understand the CFTC rule before you risk your hard-earned money in the markets. Also, by participating in these webinars, you agree to our disclaimer, which states that we are not licensed financial advisors, we are not registered investment advisors, we do not provide investment, nor do we provide financial advice, nor do we make investment recommendations, etc., etc. The information and these webinars are for educational purposes only. I am Marco, and this is my email address, optionslam.com@gmail.com. Bear with me. Okay, and then we go over to the OptionSlam website to get started with today's discussion. Now we did have a webinar recently that was implied volatility versus implied move, what's the difference? And today's webinar is really kind of expanding on some of the topics and discussions in that webinar. I've got some emails with questions about our charts. They're actually pretty simple. So, but let's get started now. I wanted to, it's slim pickings out there, isn't it, for earnings trades. If I go to my generic screener, and I even reduced the requirements down to like only 1 million of volume instead of my normal 2 million of volume, and submit that query, guess what? There's not much to trade out there. And Constellation Brands is coming up here on April 6th, which is 2 days away, before the open. So that means that tomorrow is the last day to trade Constellation Brands in a pre-earnings type of a strategy. So so not a lot to choose from. Here's a stock, Conagra or Conagra Brands. I've heard of this stock. I'm not really sure. Consumer goods, Constellation Brands, I think, is primarily beverages, and I think mostly beer. I'm not sure 100%, but not sure what I think this is food. But anyway, I've never traded that stock, but that's it. We don't have a lot to really analyze in the way of upcoming earnings in the immediate future. But the busy season is approaching. The busy season will be here. It's just around the corner. Okay. Only a couple weeks away, we'll get started with, and this will load up, and there will be pages of opportunity for through the earnings style trading. So with only those two to choose from, I guess that's what we'll go with. Let's learn about Conagra Brands. How do you say that again? Let's see. Conagra Brands. That's how I'm going to say it. All right. So when I hover my mouse over this, we get a glimpse, and this is really an excerpt. This is an excerpt from the earnings history page. This just shows you some one-day price changes from previous earnings events. Okay, so the most recent earnings events was January 5th, going backwards in time, October 6th of 2022, et cetera. And then the expected, I hate that language personally. I much prefer the language implied. I'm going to see if I can get IT to change that. Of course, there's always things that I'm trying to get them to do. Write myself a note because I always forget stuff. Expected versus implied. Okay. Anyway, this really comes from the implied move page, and so these numbers are what was the implied move, and I believe these are specific to weekly options. So let's quick and see. Let's quick go over to. I'm going to right click on that symbol, and I'm going to go open that link in a new tab. So you can see that tab is opening up over here, and that's going to take me over to Conagra Brands. And let's see the implied move weekly. So first, let me finish what I was just saying. So some of those statistics come from this page, the earnings history page. Let's see, can I bring both of these up? Sure, I can. Well, we don't need to bring them both up. We'll just do it this way. The January 5th, the implied move was 4.49%. Now, I'm going to just jump over. I'm going to open this up in another tab. So I'm going to, because all these links here in the black bar now are specific to this stock. So these are all different pages at optionslam.com that you can investigate and research historical statistics on this stock. So I just opened up the implied move weekly page. These are the charts we're going to talk about here soon. And there's that 4.49%. Okay, so we're going to get into the details of that here in today's discussion, what that is and what other information there is. But let's go back quickly a minute to the earnings history page, and let's look at this pop-up again, because this pop-up is just a shortcut, and it gives you some quick information while you have. And imagine that we're in the busy season and we have 25 or 50 or more stocks here to choose from, okay? Today we only have 2. But normally when we get into the busy season, you have lots and you don't have time necessarily to go and open up the stock-specific pages for every stock that shows up on your stock screener report. So this is just a little shortcut to give you some basic information. It grabs the implied move from the implied move weekly page, and that's the final implied move. Okay, and we'll get into that more here in a minute. And then it tells you, and it grabs this information, is the max move. Now, this is the one-day price change move. This is the max move that one day after the earnings were announced on January 5th. And I assume that this was also before the close, before the open, because most stocks, when they report before the open, they report religiously before the open. Most stocks, not all, but most stocks don't change and report this quarter their earnings event before the open and next quarter after the close. Most stocks, stick with one or the other. All right. So this information actually comes from the earnings history page. So let's go over here to the earnings history tab. Okay, so that's this page. By default, that's the first page that we open up. And there's that max move of 5.51. So in other words, the stock moved up that day $40 up to as high as $40.78, but it closed at $39.97. And then those two numbers, the max move, whether it's the high or the low, in this case, it's going to be the low. The low was the max move. Oh, okay, when you see it on this next line, right? And these are just so the max move, whether it's the high or the low, and the close are simply converted to percentages in terms of the percentage of move from the pre-earnings closing price. Okay, so it gives you a quick measure of how volatile the stock is or has been recently, and some directional bias or directionality assessment. You can see quickly that they went up last earnings, down the earnings before on the earnings event, down the first day. Now, the first day on a before the open type of an announcement, the first day is that same day. So April 5th is the first trading day after an announcement that is earnings announcement that is announced prior to the open, right? Makes sense. After the close, which is the other alternative, well, then the next day is the. So if this said AC, then it would be April 6th. That would be the first day. All right. So let's now jump over to dive into this implied move idea here again, and that 4.49 is coming from the implied move weekly page. I'm already in talks with IT about, for stocks that don't have weeklies, which I very rarely trade stocks that don't have weeklies. Okay, but that's just me. Some people trade stocks that don't have weeklies a lot. And for those folks, I'm already in talks with IT about adding some more data and using implied move monthly statistics for some of the information that we provide, okay? So you don't even need to request that. It's already in the works. Okay, so again, so now I'm going to jump up to the chart before I show you what's hidden behind this submit button, okay? So I jump up to the, let me scroll this so that we can just see that. I do this so that we just not quite. Maybe I can reduce the size. Okay, by reducing the size, that helps. That helps. Now I can see the whole chart, and I can see this line. All right. So before I get into it anymore, open, high, low, close here does not refer to the price of the underlying, like the over here on this page, open, high, low, close refers to the price of the underlying stock. See how it's naming prices? It's publishing prices of the underlying stock, the high of the day, the low of the day, the open of the day, the close of the day. But on this page, high, low, open, high, low, close refers to the implied move, not the price of the stock. And we're gonna delve into this submit button here in a minute to see where this data comes from. Okay, and that data is available hidden behind that submit button. All right. So, and let's see, April 5th. We'll have to change that. When we do that, we'll have to change it to the January 5th earnings event. Okay. Now, what do we have here? This chart is really a graphical illustration of this information. Okay, let's start with the columns. EVR is that's not represented in the graph. The pre-earnings close is represented in the graph by the gray chart. This is the price. This is the price of the underlying stock from earnings event to earnings event to earnings event. So you can see what happened to the price of the stock in between earnings events. So I just randomly pick this one. Here's a earnings event. You can see that the price of the stock went up. It went up after that earnings event. Okay. We'd have to, let's see, you can jump back here to this page to actually get a detail of that. And then we'd have to just drag over to that earnings event. I randomly picked one and I don't remember which one I picked. Let's just, rather than randomly pick one, let's pick one that's obviously here recent. The most recent earnings event is right here. And you can see the initial move, these are daily candles. The initial move was up, but within about 2 weeks, it gave up all of those gains and then went down. Now let's go back here to this chart. Now this chart is zoomed out. This is like the 30,000 foot view, right? And the price chart is scrunched in here quite a bit. You can barely see the gray line is actually an up move. And then this is actually about 2 weeks of time, I guesstimated, before price actually went below the pre-earnings event price. And there you can see the gray line is now below. All right, and just so you don't lose me here, there's the immediate move up, about 2 weeks of time, and then this big candle took that price actually down and below the pre-earnings close. And then there was a down move that ensued after that. Interesting stuff, right? So there's some information that I wanted to clarify. You can see it. It's just like the 30,000 foot view of the pre-earnings close. Now, then the next piece of information here is the final closing implied move. So what happens here is we track the implied move based on the at-the-money straddle for the options that expire immediately after the earnings event. The front, what we call the front Friday, the front weekly options expiration cycle that expires immediately. So these options, let's see, this stock is going to report on April 5th. Oh, April 5th, BO. I thought that said April 6th. Oh, no, that was stars. That was Constellation. That was Constellation Brands. CAG, Conagra Brands is tomorrow, April 5th, before the close. So today is the last day to trade Conagra Brands. Okay, today through the earnings trade. So, it's great to review what happened historically because you get to feel and learn the personality of the stock. How does it act around earnings events? All right, let's get back to the data that that's portrayed in this chart. Okay. So 4.49% on the January 5th. Well, that's this earnings event right here. You can see it aligns with this date, which is this date, and the 4.49% is represented by this implied move weekly, this orange line or this orange vertical rectangle. And when I put my mouse over it, it's suggesting, and these are just round numbers, just to keep it simple and get the bird's eye view, we just round to the closest whole dollar here. The implied move from where that stock closed, which was right here, $38.65, is up 4.5% of $38 to down 4.5% of $38.65, or the $39 at the money straddle position. So the downside is at 37, the upside is at 40, with the stock trading at around 38.50. Okay, does that make sense? Up $1.50 or down $1.50? All right, that's really what it comes down to. So that's what that rectangle represents. Now, the rest of this candle, so we've got the gray line is the price chart, basically. The implied move on the final day, right before the earnings is announced. And then this candle is the open, high, low, close of that stock. That information, you can see that information back here on the earnings history page. That information comes from here. That candle is created. You know, candles are just like Western charts, right? It's all the same information in a Japanese candlestick. It's the open, the high, the low, the close. The high and the low are represented by what we call wicks, or what else do people call them? Can't think of some of the other names, but wicks in a candle, and then the body of the candle is the open to close. That's the body of the candle. And here's the top high wick and the low wick. That information is represented right there. There's a picture of that daily candle. And it's placed, notice it's placed inside the implied move. In other words, this stock did not exceed the implied move on the earnings date. Now, excuse me, not on the earnings. Well, yeah, in this case, it is on the earnings date because it's before the open. But but what I should have said is it did not exceed the implied move of between $37 to $40 in round numbers. In that first trading day after the announcement. Now, that's all great information, Marco, but how does that help me trade? Well, it helps you trade because you can look at a history at a glance. You can just look at how does this stock behave at earnings events inside the implied move. Inside the implied move, but down. Okay, inside the implied move, but up. Does not follow through after the implied move, but it did take 2 weeks. See, there's so much information, but I'm going to just quickly jump over here to the post-earnings page to show you that there is more detail, okay, and where the detail, some of the detail, let's jump over here just for a quick moment to the post-earnings page, and you can see that same earnings event here, and you can see that the up move lasted 1 day. Oh, it lasted 3 days. Oh, it lasted 5. But after 13 days, just like I said, about 2 weeks, and I was just guessing by looking at how many candles there were on this same chart, okay, that was also on the earnings history page, which we have up. I was guessing about 2 weeks, and sure enough, it turns out it was exactly 2 weeks later. the up move from the earnings event was totally erased after 13 days in the post earnings event. All right, back to our table in our chart here. So you see, the point I'm trying to bring to you is that this chart looks like, oh yeah, that's interesting. That's just a little bit of information about, what happened. But you know what? It's a lot more than that. It's the, like I say, it's the 30,000-foot view of how this stock behaves. And let's take a count here. All right, there's 2, 4, 6, 8, 10, 12 earnings events. That's 3 full years of historical events captured and provided to you. So for you to just wrap your head around this information quickly and say, oh, I got an assessment now of how this stock usually behaves, not only on earnings event day, but prior to earnings event, what does the price do? It's rising. Look at the gray line. It's rising as it approaches its earnings day. It's rising as it approaches its earnings day. It's rising as it approaches its earnings day. Okay? Here, it was flatlining, but right in those last, I don't know if you guys can see this. Let me blow this up a little bit so it's a little bigger. Okay, so recently, now here's one where it looks like it went flatlined and actually fell those last few days. Now you got to jump over to where we have the full chart where you can actually see, you got come down to about 10,000 feet now. You follow me? Or that same chart is available here on the earnings history page, down to 5,000 or 10,000 feet now, and zoom in a little bit. But bird's eye view, as they say, right? This stock seems to rise oftentimes as it's approaching its earnings event. And that's a trading strategy in and of itself. If you find a stock that has the habit of rising as it is approaching its earnings event, is there a trade there? Of course there is. You don't hold the trade through the earnings event. You play that historical information and you put a bullish bet on it, right? See my webinar in the archives. Stop buying calls and puts. Okay, I would not suggest you just go out and buy a call because excuse me. See the video. Okay, the videos are here. Resources, Option Slam webinars. So there's the historical webinars. All right, back to, all right, so let's see, what else did I want to get into here? Oh, shoot, what did I do? All right, here we are. All right, so let's see. I lost my train of thought. Okay, so, all right, so here we go. All right, so there's lots of information here, but it's the 30,000-foot view. And all right, so what is price doing before the earnings event? What is the implied move? This is the main focus of this chart is earnings day and the one day after, represented by the candle. And really important to notice is this stock move inside or outside the implied move? Is this stock a wild, does it have wild reactions to its earnings event? Or is it somewhat subdued in that the price action one day after an earnings event stays inside the implied move? And let's take account. Let's just, again, this is, you can do this in your mind way faster than I can verbalize it, right? I can just take a quick glimpse of this chart and say, you know what? This stock almost always stays inside the implied move. I can only see two quick examples of where it actually moved and closed outside of the implied move. One, two, and just barely on the example number 2. Other than that, it is pretty obedient. It is pretty, what's the word I'm looking for? It is pretty consistently inside the implied move. Now, based on closing move, based on max move, we actually document that in this table below. So if you want to study this table and do the math and go, okay, based on the max move, this was outside the implied move these times, but totally inside. Based on closing, I can do all of that and assess all of this, or I can just look at this picture and go, boom, I got the information in my head in about 2 seconds, really, rather than studying tables. That's basically what we're doing here. All right, so that's the implied move. And then, of course, we already talked about the follow through after. And then for the details of the follow through, you go to the post earnings page. For the details of the 1-day history, the 1-day actual price action, you go to the earnings history page. And for the details of the implied moves, you go to the implied move weekly page or the implied move monthly page. All right, so let's go. All right, and here's our implied move weekly page. Now we're going to go into this submit button, and we're going to, let's see, we want the January 5th. The January 5th action. Okay, there we go. The January 5th action. Well, what's hidden behind here? Well, it's just some detail. And actually, we removed all of this whole table that you're going to see now. We actually removed this from the website a few years back. And right away, we got a bunch of emails from people going, hey, what happened to the detailed view of the implied move? Well, we didn't think that anybody was using that information, but it turns out that we had to quickly get it back on the website because we got a lot of complaints from users because they actually do pay attention to the details. So here's what the details do for us. That when I open up, now this wasn't a great example because this one we don't have a lot of historical details on that one. Not a lot of captures. It's a lower price. Let's try stars. Let's try Constellation Brands and see if that's a better example. All right, so I'm going to go back to our query page. Let me zoom out here a minute. And another thing that's cool about that pop-up, and I'm all the way back here to the stock earnings page. All right, I'm right here on this stock earnings page now. See, I've got several tabs up here. So I'm going to go ahead and close Conagra Brands. And what's cool about this pop-up is when I hover my mouse over here, it gives me this quick detail that I talked about earlier. That gives me information from several pages of the options plan website, just like a quick summary, some information at a glance. But what's cool about it is if I just scroll down my list of stocks, and again, remember here in a couple of weeks, this list is going to be 25, 50 stocks long. So it's not so easy to go do all this research on every stock. You might not want to get into all the detail on Conagra Brands, but you might want to get into the detail on stars, okay? But here you got a quick a quick glance, and then if you want more detail, right click, open that in a new tab. It takes you immediately to the earnings history page, but you can quickly jump to the implied move weekly page. All right, so now we're on stars, and let's see if this is a better example. In this example, the event was January 5th. So we're going to go here to January 5th and click the submit button. And now this is a much better example of what this new table that was hidden behind that submit button, this new table that is now populated. Let me explain how this works. Okay. Wayne made a couple comments, so let me. Thanks, Wayne. Shadows instead of wicks. Perfect. CAG looks like a good candidate for an IV crush with all the trading except wicks and only one time falling within the implied move. That's exactly what I'm. So Wayne's come to a conclusion by simply looking at the chart. And that's exactly my point. That's how you can just come into Option Slam, look at a stock, develop a quick opinion, think of a strategy that you might want to apply, and then delve deeper. Let's see. Actually, let me see what else. We had one other thing to say. 3 times outside the implied move, the trade day after the earnings announcement. I only saw this one. Well, I guess if you to get into the detail, you would go to the table to see the detail, and technically, and again, the chart is using rounded numbers, whereas the table actually is more precise with the actual implied move. So it might be, excuse me, hold on a second. I'm fighting a respiratory issue, and when I get excited and talk a lot, then I tend to want to try to cough here. Sorry about that. Hang on a second. Wow. Okay, I'm back with you. Yeah, so looking closer, and technically the move was, but here you have so this one was 9.72 compared to a 4.24 implied move. Okay, this one was only 1.45% of a move compared to the implied move of 4%. Now here's one that moves slightly beyond the 3.96, 4%. It did close outside of 4%, but only barely at 4.3. Okay, so same there. So anyway, 30,000 foot view, detail. All right. As with all the other information we already talked about. Now, let's get into this table. Thanks for that, Wayne. That was a perfect assessment. All right, so when was the earnings event? January 5th. Well, about a month prior to the earnings event, we start capturing the implied move. So this is the very first capture, December 6th. And what was the implied move on December 6th? 6.4%. Okay, the straddle cost was $18. The don't know exactly where the stock was. I'd have to go to my, right down here, 231. Well, oh, I don't know where the stock was on. This is the final day. I'm sorry. So I don't know exactly where the stock was, but it was close to $250 on this day. On this day, okay, it was very close to $250. $250 was the closest at the money, closest strike was the at the money position. And the straddle cost was $18, which represented a 6.4% of the price of the stock, or the price of the straddle position. And then, was the stock ever back at 250 over this period of time? That's the question. And you can just look over here. What was the implied move low of the 250 strike and high? So it never, there was only one capture. So from December 6th on, this stock really never came back to 250 between here and the earnings day. So there's some there's some information. Now I want to just scroll up, and there we can see it. I was saying, this is Constellation Brands. I was getting mixed up with Conagra. I was getting mixed up because I remember we were talking about how Conagra seemed to have a habit recently in the last 6 or so earnings events, if I remember right, of moving up into its earnings event. And then I was surprised to see that it moved down into this earnings event, which is evident right here because the price of the stock never really came back to 250. It went down and down and down as time went on. And as we approached different strikes to be the at the money implied move straddle price that we're capturing, okay? So we don't just capture the price a month, so let me be clear about this. We don't capture the price of the 250 straddle and just follow the 250 straddle for the rest of the month. No, we follow the price of the stock. We're trying to gather and gain a perspective on how does the implied move evolve in that 1 month as we're approaching the earnings event. So we need to follow the price and capture the price of the at the money position as price fluctuates. And in this case, price fluctuates in a downward trajectory, period, right? In this particular month. And then, as we can see, all of that selling wasn't even enough because when earnings came in, it sold heavy again. All right, so that's interesting stuff. All right, let's get back to this table. All right, so then the very next day, the at the money straddle price was the at the money strike was 245, and the implied move went down slightly from here, down to $18.16. I'm going to show you the other chart. This is going to be represented graphically. All right, and as you can see, the price of the at the money straddle continued to deteriorate as time went on. Well, that makes sense because simply there's less time to earnings day. You know, we're capturing the weekly option straddle price of the options that expire immediately after the earnings event in all of these instances. So we're looking at the same expiration cycle. So here there's a month to the earnings event. Here there's 1 day less than a month, 2 days less than a month, 10 days less than a month, etc. So there's less time is going to obviously options are going to deteriorate due to theta decay, right? So obviously you would expect the at-the-money straddle price to deteriorate over time. All right, so let's just find a couple examples of, here's one right away, December 7th. So there was, this was a 6.69% implied move. And then on December 12th, price came back, okay, so 7th to 9th to 15th. But there was some wavering in price action in between these days. So 7th to 9th to 15th. Well, on the 12th, over here, price bounced back up to 245. And we captured on the 12th another 245 price capture of straddle price capture of 5.95%. And on December 7th, oh, that was the original capture, it was 6.69. So so you see over here, this is where, here's the December 14th for this strike. Here's the 29th and the 15th for this strike. Okay, so this is the information. I know it's not easy to see at a glance here. It takes a little bit of study to absorb the information that's displayed in this table. Most people aren't interested in it, but as I told you, some people are very interested in it, and we got read the Riot Act when we took this information off of the website. So we keep it on the website, but it's hidden behind that submit button. All right, and it's available for, quite a few earnings events. Depending on the stock, how far back we go with that. All right, now let's see, what was I going to get? Oh, okay. Now the next thing is we're going to go to this. All right, pretty typical that I would expect to see. This is the phenomenon that I was just talking about, and that is that theta decay. This is Japanese candlestick time again. This is where the first capture happened of the straddle price at the top of this candle, and the final capture of straddle price happened at the bottom of this candle. You can see very little in the way of wicks here. Now here, or thanks to Wayne, shadow is the other term that I was trying to think of. Here there is a shadow. So let's see, do we have, no, we don't go back that far. Do we have any other shadows? A slight shadow here, which is the one we were just looking at. And I did notice that in the table. That is the January 5th. I saw that in the table. The opening implied move was 6.4, but if you look at this table, there's a 6.7. Okay, so that's what caused that little shadow up right there. You can see it right there above the body of that candle. That's that 6.7 up, higher than the open of 6.4. And are there any others that are higher? No. Okay, so that's that information. Folks, I'm running out of time. I've got another meeting scheduled, and I'm going to have to cut this short. So let's see if there's any questions. Let me see. Okay, RB has made some comments. Sirhan, oh boy, quite a few. Give me a quick minute to read this stuff and see if I can answer these questions. Or maybe they're just comments. Let's see. Give me a minute. Straddle options used for implied move are the 1 week option. No, they're not the 1 week option. They are the, okay, excellent question, Harvey, for clarification. I might have answered this question already, but so the earnings date is January 5th. So if we go to a, let's see, I think what we'll do is we'll just go to a calendar. Let's go to a calendar here a minute. Let me see if I can find a quick calendar here. Here we go. The earnings date was January 5th. The options that expire immediately after the earnings date is January 6th. Go back to our table. All of these at the money straddle positions are looking at the January 6th option. Okay, they're looking at the options that expire immediately after the earnings event. So there's less and less, as we move forward in time, there's less and less time. And that's why this table, this chart, shows, see, that would be an interesting one to study, but I don't think we go back that far in these tables. That was 043, April of 2020, and I don't think we only go back to the beginning of Jan of 2022. I wonder if we could add more information, because that would be an interesting one. Look at how high that wick is. In fact, all three of these have substantial increases. Now, not many stocks, and I can never seem to remember which stocks, where you'll actually see a green candle here. Occasionally, not very often, but there's not very many stocks that have it. I always seem to think that Netflix might be one. Let's see. And knowing that, let's go to the implied move candle. I'm wrong about that. How about, and I want to find one. If you know of one, let me know what it is. And then we'll investigate it just quickly. And we'll, all reds. Well, I'm not going to spend the time. I'm really hurting for time here. Really hurting for time. But if you see a green candle, what that means is, let's go back to our, let's see, what we were on, STZ, right? And we were in the, we were in the implied move weekly page, and we were investigating the January 5th earnings event, and we were in the detail table of price captures. So if you ever see a green candle, it means that the final closing price capture of the at the money straddle was higher than the open capture. And it's pretty rare that, how can that happen? Because there's less time to earnings, to the expiration cycle. The only way that can happen is implied volatility outpaced and overcame theta decay. That makes sense. And it is rare to see that, but it occasionally does happen. Okay? Let's see, there's lots of stuff, just for clarity. Okay, I think I answered that. You explain why the return at post earnings, last column showing very high number of returns. Sirhan asks the return, so I think he's talking about here. Okay, so this is these columns I didn't talk about today, but Sirhan is asking about these columns. What does this mean? This means that if I would have on January 4th, okay, because this is before the open, on January 4th, when the stock was trading at $231, if I would have bought the straddle for $9.75, which represented an implied move of 4.24%, if I would have bought that straddle, I would have profited in one day 119% profit. If I would have sold that straddle, I would have lost $119.28% against my risk. What's my risk? The cost of the straddle, $9.75. If I would have sold the straddle, I would have lost my $9.75 and another $10 to boot. If I bought that straddle, I would have doubled my money, more than doubled my money. So here's a loser, here's a very small winner, here's a pretty decent winner buying the straddle. These are assuming you buy the straddle. We're not recommending you buy the straddle. We're not recommending you sell the straddle. These are for statistical purposes and analysis only. Okay? The tables are, it's hard to figure out. I know, Arby. It's hard to figure out the tables. That's why we provide the charts. That's why we provide the charts. This is easy to figure out. Okay? First post earnings close. First post earnings to that question. Reading more questions here. I'm pretty sure I've answered this question, Arby. And maybe you typed this after I answered it. The implied move. So let's look at, let's see, who's got earnings? I'm hurting. I'm out of time here. I've got another meeting. But I hate to leave questions unanswered. So let's just look out 3 weeks in time here and resubmit. Okay. Now we got more stocks. JPM's coming up next week. JPM's coming up next week. United Healthcare is also coming up next week. How about the week after that even? IBM. Let's go to IBM. I'll go ahead to IBM. I'm going to open that in a new tab. I'm going to go to the implied move weekly is 4.92%. But the earnings aren't until April 19th. This is the implied 5% of the stock price is what the straddle costs. That's what this is telling you for the weekly. 7% for the monthly. We didn't even get time to get into the implied move monthly, but it's all the same as the implied move weekly, except it uses regular monthly expirations instead of the first Friday after the earnings event. It's the third Friday after the earnings event. Okay, implied move regular monthlies are always the third Friday. Okay, so this is the implied move right now for an event that doesn't happen until April 19th, which is actually looking at the options that expire April 21st. That's 3 weeks from now. Today is the 4th. Do you think when we get to the 18th or the 19th, right before the earnings event, that the implied move is still going to be 4.92%? Or is it going to be less than that? Or is it going to be more than that? What do you think, Arby? And let's see if I've answered your question. My question to you is the implied move weekly going to be higher, lower, or the same come April 18th or April 19th, right before the close? Okay. Well, the answer is going to be lower than 4.92%. Theoretically, hypothetically, I can't guarantee that, but if I go to the implied move weekly page of IBM and I look at the implied move candle table, there's one of those greenies that I was looking for. Okay, I'm out of time to investigate this, but you can do it on your own. Just go down here to the January 24th, 2022, and study that table. Select that, submit it, study that table, and you'll see what happened here. The implied move actually increased over time. Very out of the ordinary. Okay, folks, I'm sorry for my coughing, and I'm sorry I got to cut the meeting a little bit short here today, but we are already over an hour, and I'm going to be late. So thanks for being here. Look forward to seeing you in the next webinar. Goodbye for now, and good trading. Send me an email, Harvey. Send me an email. optionslam.com@gmail.com.